Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, executives, thought leaders, amazing people all around the world of crypto and blockchain. And today I have another amazing guest. He is the founder of Chronicle Labs. His name is Niklas Kunkel. Niklas, welcome to the show.
Hey, thank you for having me. Pleasure to be here.
You're very welcome. It's a pleasure to have you here today, and I'm looking forward to our conversation. So let's kick things off, and I'll ask you first. What is your background, and is it a logical background for what you're doing now?
Yeah, I think it's actually relatively smooth. Started my journey into blockchain. My first job after university was at IBM Research. Um, was working on mainframes, which, despite being kind of 70s technology, are transaction-based type of systems, right? So they handle all of Visa, kind of credit card transactions. They handle all of the hotel reservations and management, airlines. So very similar use case to what kind of the way that like blockchains are architected and transact. Um, about a month into that, told my boss like, hey, this is not really my thing. I kind of want to work on something else, or otherwise I'm going to quit. With the arrogance that only a 23-year-old can have. Little bit embarrassed looking back on that. But I think my manager was very understanding, and he was like, you can, if you quit, I can't hire a replacement, so let's negotiate. So if you work on this half time, you can work on anything else that IBM Research is working on the other half of the time. And I think the cool things that they were working on were blockchain. Um, so I was like, okay, let's go with that. Um, didn't quite work out how I imagined because what effectively IBM was working on was like a permissioned ledger, right? It wasn't a public chain, and it was called a Hyperledger. And when the Ethereum kind of white paper, yellow paper came out, it was like, oh, here's this public chain, and we've been thinking about this all wrong, right? And like, we should be thinking about it in this way. And, typical kind of corporate minded, like, no, 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 it has to be permission. No institution will ever transact on a public ledger, right? In business, it's all about, business privacy, right? Um, so yeah, I did worked about another year, and then Ethereum was actually released, and it was like, no, 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 it's real, right? It's not vaporware like the this public chain. It's happening, right? That this is how things are going to go, and it was kind of just like, no, 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 shut up, right? That's kind of when I kind of closed the loop, so to speak. I went to like Ethereum land, and I was like, okay, who's actually doing real stuff here? And that's how I kind of stumbled on MakerDAO. So I was one of the first engineers at MakerDAO. Um, and I'd like to think we were pretty successful.
I'd say so. I'd say very, very successful. Um, it's interesting. I have a comment regarding the IBM time. I had a conversation. I was a consultant back in 2017, ICO consultant.
Hmm.
IBM had a conversation with me. I was like, wow, they're going to hire me for a job or for a
Uh-huh.
project. This would be awesome. And the whole entire conversation was like, how do we retain our people from going to Ethereum? And, I'm like, I gave some ideas, but like, I'm like, I didn't know
Hmm.
like the whole team was on the call. So I'm like, you know, so it's good to see we have some talented people go to Ethereum land. you know, um, so Chronicle, what's it all about? What are you looking to solve?
Yeah, so Chronicle is kind of the continuation of Maker. At Maker, I was kind of in charge of, among other things, building out the oracles. And actually, the MakerDAO oracles were the first oracle live in production on Ethereum. I think a lot of people don't know that. And throughout the years, Maker kind of continued using this in-house Maker oracle. And a number of years later, I was kind of like, looking around and being like, there were obviously other oracles in the market at that point, but we felt that we had something that was better than everyone else, and so it seemed um, a little bit foolish to spend all these resources building this only to use it internally, right? And so it made a lot of sense to spin this out as a generalized product for everyone in DeFi, and I think that's kind of like the this very like natural transition, right? From Maker kind of DAOifying, splitting up into all of these different sub DAOs. I think the timing was perfect for us to make that leap into kind of Chronicle venturing out on our own. And so what we've done with Chronicle is we've kind of taken a look at where things are, where things are today, but I think more importantly, where things are going tomorrow, right? So, we are one of the largest oracles in DeFi today, right? I think we're the second largest with somewhere around 11 billion in TVL. So, that is our bread and butter. Uh, but when I look to the future, you know, yes, there are changes in the world, but specifically focusing on kind of crypto finance, um, it, it's going to radically transform in the next 12 to 18 months. I think we've been very used to um, a type of DeFi where the primarily we're looking at very large amounts of like leverage rehypothecation, right? Um, and I think that's kind of about to change. I think the size of DeFi right now is going to like swell, but it's going to swell in terms of tokenized asset kind of deposits, or you think of it more as kind of a collateral base, and that is going to really quickly outscale the let's call it the crypto native um, kind of TVL and collateral. So that's kind of where we're at right now is the influx of institutional capital is going to come in the form of these tokenized assets, and DeFi is going to become the credit engine for these tokenized assets. Um, and like just the sheer scale and magnitude of like the amount of assets like sitting on the sidelines here that can be tokenized, that can be um, uh, used in kind of generalized DeFi credit protocols. I mean, we're talking about trillions of assets, right? And this is kind of what DeFi needs to kind of take that next step, right? Like I think a lot of people kind of say, we're speed running traditional finance in DeFi, right? Um, but I think in the last couple of years, right, this idea of growth has always come from, oh, institutions are going to inject capital, right? That's what's going to grow DeFi is institutions like the banks are going to inject capital. No, it's not injecting capital. They're going to inject their assets. And actually, that's even better for DeFi.
Hey, lots to unpack there, and I want to get into everything you said. I do want to touch on. I usually touch on news, major
Oh,
news,
okay.
events first. So I want to do that first, and then I want to dive into everything. So
Absolutely.
So you recently have been tapped as an Oracle provider for the Spark 1 billion, right? How did that success come about, and what does it mean?
So
And
the
congratulations, by the way.
Oh, absolutely, thank you. So the Spark Tokenization Grand Prix is essentially exactly what we were just talking about, right? It is DeFi starting to scale out the adoption of tokenized assets and generating credit against those tokenized assets. So traditionally, if you look at Maker and Spark, right, they have given out crypto loans, right? You against Lido staked ETH, against wrapped Bitcoin, right? And now is the introduction of giving out loans against tokenized assets, right? Or essentially, you can also think of it just as delegating credit into, tokenized assets, particularly into fixed income. And so the Spark Tokenization Grand Prix is this emblematic of this, crawl, walk, run, right? So they started off doing some one-off kind of tokenized asset opportunities to test the waters, to test like the structures, the flows, how everything kind of works. And now it's time to run, right? And so they went big, right? They wanted to allocate $1 billion worth of credit into tokenized assets, and in this case, particularly kind of money market funds and direct kind of treasury bill exposure. And this is kind of where Chronicle comes in. Because I think with crypto systems, we're used to, by default, everything being transparent, right? It goes back to, right, we're talking about a public chain. It's completely open, right? You can see the code, you can see all of the transactions, you can see that unlike a bank, right? In a DeFi protocol, you can see all of the assets. You can see that there's more assets than liabilities. You can identify that this DeFi protocol is solvent, right? That it's healthily collateralized, right? You can do the same with on-chain stablecoins like DAI. This is really difficult to do for tokenized assets, right? Because the actual assets are sitting in meat space, right? They're sitting off chain somewhere. And so you are inherently, by using, as a DeFi protocol, by integrating and using a tokenized asset, you are inherently accepting this counterparty risk that what the issuer has claimed, is sitting at a custodian somewhere relative to the amount of tokenized assets that's issued, right? That those are, one to one, right? Or again, right, that the assets are more than the liabilities, right? The amount of traditional assets sitting at a custodian are greater than the amount of tokenized assets issued against those, right? And this is where Chronicle comes in. So this is what I meant earlier when I said, we're looking at where DeFi is today, but really we're looking at where DeFi is going and what the future is going to look like. And the future of DeFi is trillions of dollars of tokenized assets, and Chronicle kind of sitting in between the meat space and the blockchain to give the same transparency around a tokenized asset that we do with a crypto native asset, right? So what the Chronicle Oracle will do is it will tell you on chain exactly, in the case of, let's talk about the Spark Tokenization Grand Prix, right? The winners were, I think, Centrifuge, Superstate, and BlackRock Securitize, right? We will go and look exactly at how many underlying treasury bills there are. We can identify what their purchase price was, when they're going to mature, what yield they have, what this kind of aggregated yield is among the entire kind of balance sheet. And this information is fed into an oracle that a DeFi protocol like Spark and like MakerDAO can then leverage to manage these tokenized assets in a responsible manner.
Sounds exciting. I just want to. I want to get first. The first thing I want to do. I want to get to the current state of oracles, but like maybe that could be embedded in this next question. I want to find out. You said that the market, the DeFi market, is going to transform dramatically in the next 12 to 18 months. So I want to find out where we're at today, including the challenges of oracles, and where you think we will be in 18 months, including those solutions to how the challenges of oracles.
So I think, more or less, right? You can kind of consider us from an order of magnitude, right? We're not at millions, we're not at billions, we're not at tens of billions, right? We're in the very low hundreds of billions, right? Doubling or tripling in size, that's not very exciting. And that's what kind of where we're kind of at the limit with injection of kind of small institutional capital. With the introduction of traditional assets, right, we can unlock that $1 trillion order of magnitude. That's what we're looking at here, right? And you can already see it now, right, with how big is the IBIT, the BlackRock Bitcoin ETF. I think it's probably sitting at, I think last time I checked, 80-ish billion dollars, maybe a little bit more. Right? That's from when was this created, right? So there's like the ability to for an asset manager like a BlackRock, a Fidelity, an Apollo, right? Think of maybe like State Street. They have an incredible amount of assets on their balance sheet, right? And so if they can tokenize these, right, into a uniform kind of container-like format, right, and we get kind of a good regulatory framework around this, right, that gives people trust, that gives agents kind of operating in this space, trust in those assets and the quality of those assets, in the legal standing of those assets, right? Then, we're cooking, right? This is and for the first time, and I think in many years, right? It seems like the stars are kind of aligning, both from institutional appetite to public chain, scalability, to the political appetite to create the appropriate regulatory frameworks. Everything is kind of coming together all at once, right? And so this was never a question of if it will happen, right? For years now, this has always been clear that it's going to happen. The only question is when. And really now everything is coming into alignment, and now that it has, these are going to scale fast, right? Like right now, we're talking about billion-dollar tokenized asset issuances. Pretty soon, we'll be talking about 10 billion, right? And after that, 100 billion.
So you see, you're talking 100x to 1,000x improvement or increase in volume and size, basically. And you said that DeFi will be the credit engine that does that. How do you see the Oracle landscape transforming along with it? Like, right now it's you guys and Chainlink and some others. How do you see more oracles? Do you see advancements in the oracles? How do you see the oracle space playing a role? Because it's supposed to, I thought it was supposed to be a decentralized role, not centralized,
Mhm.
but the central role in the decentralized finance.
Yeah, so I think not when you look at the Oracle landscape. I mean, one, it's there's a lot of players, right? And I mean a lot, right? From back in the day when it was just Chronicle, under the auspices of Maker and Chainlink, right? It was just two. Now I think we're up to like 10, right? But I do think that the way they have positioned, there's technological differences, but there's also product differences. And so a lot of them have kind of positioned themselves as kind of like a purely focused on DeFi. And I understand that, right? We've had a lot of success in DeFi, as I said before, right? Chronicle is the second largest Oracle by TVL. But I don't think enough of them are as future looking as Chronicle is. And so while a lot of them are talking about tokenized assets or maybe calling them RWAs, Chronicle is like one of the very few that is actually like built a product around this that you can use today and that is being used by DeFi protocols. Um, and I think that in terms of like how that's going to play out, I mean, I may be a bit biased, but if I have a product out and it's needed by the market to scale tokenized assets, and these other Oracle providers don't have a product out, we're just gonna gain momentum and gobble up market share, right? And especially if we can make the case, right, with these, some of the largest asset managers in the world that, hey, we've been live for this long. We have so much Lindy, we're used to handling things at the scale of $10 billion, right? We already work with X, Y, and Z, who very well, or who are your peers in industry. Go talk to them. I think that's going to work out very well for us.
Yeah, I think so. That makes sense. You also said something else. You said, and it sounds exciting to me. I don't know what it means. I want to find out what it means. You said you're speed running TradFi. I'm like, yeah, I like that. I like the sound of that. But how are
Mhm.
you? How are you speed running TradFi?
So this is a double-edged sword type of thing. So in DeFi, I think part of what made it so successful and able to grow is that the people who joined DeFi had almost no financial knowledge. And I mean that with the utmost like respect. Like um, uh, effectively, we didn't know how difficult the problem was that we were trying to solve. And so we intuitively, just followed where we intuitively just tried very many different things. And some of those things, um, became very powerful kind of DeFi primitives, right? And others, we thought we invented, but really we're just, centuries old financial primitives, right? That have existed for, for 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 millennia almost, right? So, debt, yield, but then we also have some interesting, unique, constructs that we come up with ourselves that could never be recreated in traditional finance, like a flash loan, right? Um, Anyone permissionlessly can go and get like $1 billion of credit, right? And do whatever you want with those $1 billion, provided that at the end of the block where you took out this $1 billion, flash loan, that you pay it back, right? So this is amazing, right? Because think about how liquidations work in DeFi. In DeFi, you have, let's say, the price of BTC or ETH kind of crashes. You have a lot of leveraged positions using BTC and ETH as collateral that would get liquidated. And so now you have some liquidation mechanism. Sometimes it's auction, sometimes it's like a direct purchase of these what we call distressed assets. And so, we want to be able to get, a fair market price for these assets, right? If you have a leveraged position and you get liquidated, you want to get back like the very highest price for your liquidated assets, right? That's more money for you. But what we found before flash loans is that, well, if there's only like a fraction of all of DeFi being liquidated, then there's enough capital, the players who are purchasing like these liquidations, who are purchasing this distressed capital, there's enough kind of capital to go around that these fetch like a very fair price. The problem happens when all of a sudden you have like billions being liquidated at once, right? Like it's a dark, it's like a Black Thursday and, everything has crashed like 30%, right? That now you're in trouble because now the players who are these institutional players may actually run out of capital. And so they're bidding lower and lower and lower. And maybe there's not even competition left, right? For maybe the competition has like run out of capital. And so even if you have a lot of capital, if you realize you don't need to bid as high, you're not going to bid as high, right? It's more money for you. So flash loans kind of solved this problem in a way by decoupling the effectiveness of liquidations from the amount of on-hand capital. And like the way that this works, right, is let's say there's $1 billion of ETH being sold. Well, maybe there's not a lot of players with $1 billion of cash on hand, but anyone can take out $1 billion flash loan, purchase the ETH in the liquidation, auction, and then go on a DEX and sell that ETH for, $1.05 billion, right? Or, offload some of it on centralized exchanges, whatever, right? But the point is that after you've sold it, right, you've made more than $1 billion in return and can then repay the original $1 billion flash loan, right? And this is something that anyone can do, right? And it's not just the big whale institutions, right? And so this is a DeFi native innovation. The problem is not all of our innovations are good. Some of them are terrible. And if we had more, and this is what I mean by speedrunning TradFi, because we've had recessions, depressions, stock market collapses, right? Bond market collapses repeatedly throughout the history of finance. And that's because, we thought we uncovered some new novel primitive that was, a perpetual money making machine, or, we figured, yeah, this is a safe amount of leverage, right? And then it blows up in our face and we learn, right? And we learn like, oh, we have to cap the leverage here, or we can't let, banks who take deposits engage in this other kind of risky behavior. It needs to be a separate entity, right? That takes on those kinds of risk, right? Because otherwise you create systemic risks. And if the people working in DeFi were a little bit more historically grounded in kind of the even just the last 100 years of finance, right? We very much could have avoided a lot of the pitfalls, right? With say like yield farming and the like. And so that's what I mean by speed running is even today, right? We're just constantly trying new things, and I see some of these things and I go, we've already tried that in finance. We already know that doesn't work. This is just a disaster waiting to happen. And so it's a mixed bag, right? It's the good and the bad, but I'm a fervent believer that the good definitely outweighs the bad.
Yeah, I believe that too, and yeah, it's interesting because I want to touch on one more thing. Um, you said we're shifting to institutions. Like I saw that, and I made a mistake the other day. I said, should I? I'm not going to say the name of the token, but I said, should I buy this thing at the $16 it is now, or should I wait until August when it's $6? And I had hundreds of people lash out at me, and I'm like, you know, I was my question was more in line of okay, is institutions, going to take the summer off like they usually do, you
Hmm.
know, and then come back in September. But how do you see institutions, gearing up for this, RWA, you know, uh, DeFi run that we're going to be on very soon? Do you see them pulling back, or you see them? What do you see their behavior being that has been different than in past years?
Well, I think you can just tell from the rhetoric, right? Even just a few years ago, right? You had Jamie Dimon talking down on, Bitcoin like, oh, it's a cute toy, but it's gonna fail, it's gonna go to zero, right? And look at today. JP Morgan now sells Bitcoin to their institutional clients. Um, you know, you for a while, right? You had the, blockchain, not Bitcoin kind of crowd, right? Like Bitcoin is the innovation, but like, blockchain is the innovation, but Bitcoin's not going to go anywhere, right? And when they say Bitcoin, they meant all kinds of cryptocurrencies. Where is that now? Well, you have BlackRock, the largest asset manager in the world, right, issuing a tokenized money market fund with the BIDL token, right? So you have Larry Fink, right, the kind of chairman of BlackRock, right, going on Bloomberg and saying, the tokenization of assets is going to change finance, right? So it's something that I think the crypto people have been espousing as, almost like gospel for years. Um, but now uh, the institutional players are saying it as well, right? And so that's right. That's what I meant earlier, right? With this alignment of everything, right? We have the scalable blockchains now, right? We have the institutional interest, right? They see the potential, right? We have more accommodating kind of political and regular environment that will look favorably on this experimentation and on making progress, right? So really, right, we have all of the ingredients in our little cookbook, right, to start really cranking out kind of tokenized assets at scale. And I think what you were kind of leading at was, well, what is this going to look like, right? So I think what we've been seeing until now has been a lot of tokenized money market funds, right? So um, right, monetary policy has been very kind of consistent the past couple of years, and I think people have gotten very used to 4.3 to 4.8% kind of yield on short-term treasuries, right? So I think that was a very obvious play, right? You have DeFi entities like Maker and Spark, right, allocating billions um, into these types of kind of getting treasury bill exposure, and they're earning hundreds of millions of dollars annually in revenue from doing this. I think where do we kind of go from here? Um, I think the Well, first of all, I think monetary policy rates are going to go down. Right. It's not a question of if, but just when. And then the question is, what happens with all of this money that got really used to earning risk-free, 4.5% yield, right? What do? Let's say treasury bills are only 3%, right? Um, are people happy earning 3%? Maybe, right? But some people won't. I think some people have gotten very drunk on, earning, 4.5% yield and may even be looking to juice it up even higher, right? And so this is what I mean by like this little kind of sequence of operations. I think the next thing we're looking at is other types of fixed income. So that's going to be the next kind of mountain of assets that are going to be tokenized, right? So instead of just having US treasuries, maybe we have other kinds of sovereign debt. Maybe we go a little more micro. We have municipal types of debt. Maybe we look at, corporate credit, right? Maybe there's we're looking at a dramatic shift in the way the global economy is structured. Um, and regardless of whether you think this is good or bad, corporations are going to have to adjust um, where and how they do business, particularly in the production of goods. And that is going to require huge capital investments, right? And so, um, right, I think there's going to be a lot of really high quality companies, right, trying to raise debt through bond issuance. And I think tokenizing those bonds and leveraging DeFi as a credit engine, I think makes a lot of sense, right? And I think the yields there will be very particularly attractive to DeFi, right? I think you can, look at that, 6, 7, 8, 9% kind of range. And it just seems like a win-win-win all around, right? So fixed income, to me is just clearly that's the next step of where we go from here, right? In whatever permutation, right? Whether it's municipal, construction projects, whether it's corporations trying to rebuild, manufacturing capacity, building factories and warehouses and this entire kind of supply infrastructure. Then the question is, where do we go after that, right? Is it tokenizing equities, right? Is it tokenizing commodities, right? Like, do we want to trade oil and platinum and nickel and copper and or lithium, for car batteries, right? I think that's the more interesting question, right? Like we can always see just over the next hill, but not like, the hill that comes after that. And I think that's kind of um, I think where the winners and losers are going to be made is who can read what's going to happen next, right before anyone else does.
Yeah. I think you're the first person who said those two magic words, um, fixed income. Because I worked at AIG for many years. It was a fixed income shop. Your largest insurers in the world are fixed income shops. So that to me makes a heck of a lot of sense. So I want to thank you very much for your time today. I enjoyed speaking with you. This has been an insightful conversation. So I have one last question. How can people find out more information about you, about Chronicle? How can they use your protocol platform? How can they do that?
Absolutely. So, our website is chroniclelabs.org. And I think the most interesting thing to click on there is we have a dashboard. And I think this dashboard really kind of showcases our strengths because it's an end-to-end kind of transparent Oracle. You can I kind of joke sometimes it's like a farm to table Oracle where it takes away I think this fortune teller-esque nature that people have of an Oracle, where it's just this black box and it just spits out a number at you, and you have no context for where this number or this data came from, or what if this data is true or if it's false. And I think our dashboard really illustrates this in a really transparent manner, right? Where you see not just the validators that are participating, like really good quality entities like, Gitcoin, like Infura, like DYDX, like Gnosis, like Maker, um, even institutional entities like Bitcoin Suisse. But it goes a step further and even breaks down, well, where did this particular validator get their data from, right? And like what data did they get, right? So if you look at like the ETH Oracle, right, maybe it says it's $2,500. Well, why? Well, here's all these 20 validators that all said, ETH is 2,500, and, let's look at the Bitcoin Suisse validator. Why did it report that? It's like, well, it went to Coinbase and it got this, and it went to Uniswap and it got this, and it went to Binance and it got this, right? And it's shows you the entire, from the raw data, from the, direct source to how it was modeled and ended up on chain. And I think that one is very powerful, and necessary from a uh, appropriate risk, like a responsible risk management point of view in DeFi. But it's also, going to change the way that regulators, right, approach DeFi, right? What is the need to file, quarterly filings or annual filings for a DeFi protocol when you can have an oracle just telling you everything you need to know in real time, right? And so I think if check it out, play around with it, but I think your eyes will be kind of like awakened after experiencing that.
Awesome. Awesome. Thank you very much for your time today.
Likewise, thank you so much for having me. This was great.